Cheers guys, Nico here. Today we are going to talk about the red flags in picking an algorithmic trading system, which are also called EAs, expert advisors, trading robots, trading bots, and so on. All those terms are meaning pretty much the same, which is a piece of software trading the financial markets in a mechanical way. And what you see right here is the MQL5 platform, which is simply a marketplace for those algorithmic trading systems. And today we are in particularly taking a deep look on the Bonnitta EA. And without losing any more time, let's take a look on the first red flag, which is actually being triggered by the real money account provided by the creator of the system themselves, which is first of all actually a pretty strong green light as well, that the creator of the system dares to share the real live money account, since you as a potential client can actually understand and see what is the current performance in the real life market, live data, considering slippage, delays, commissions and fees and so on, which is just a strong source of simple trust, that you can actually see what is the current performance, what do you get for getting this algorithmic trading system in your investment portfolio. So when you click on the link, you actually get to an in-depth analysis of the signal you see here with the equity curve or the performance, which is around 420%. That is stellar, to say the least. And you also see the maximum drawdown of around 55%. This is, to be honest, relatively high. And the system is definitely not pursuing the so-called fund approach by protecting the downside, protecting the money you're trading as much as possible, since 55% of drawdown is relatively high. That simply means when you start off with a trading account of 1,000 euros, at one point you only had 450 euros left in your trading account. And you see this is quite a dent, and definitely not a low risk investment in that sense. Here you see the historical the time since the trading system is live, 187 weeks, but the focus is actually on the balance curve or equity curve. Here in this graph you see two kinds of curves. The blue one is the balance curve, so the money you have actually on your trading account in the end, and this is so-called real money, if you want to say it like this. So the money you can actually buy the coffee for on the street. And the green curve is the so-called equity curve. This is simply not yet unrealized profits and losses, which you can already see that the blue curve is more or less always uppointing, a very strong sign that there's something fishy going on, since even the best fund managers, best investors on the world are taking losses home from time to time, but this system does not, simply. So that is a bit off, seems a bit weird. This is already a strong indicator that the system is a victim of the so-called martingale approach. You have probably already heard it in the context of gambling, that if you lose, for example, €1 in a specific bet, on the next bet you simply double the size of your bet. In that case, you lost €1. Next bet, you bet €2, then you lose, and you bet again €4, €8, €16, and so on. You get the idea, until you make all your money back. This is absolutely no problem, and a very viable approach, of course, if you assume that you have unlimited resources, and even money, at least for your own purpose, is quite limited. And at one point, such an approach, especially in the context of trading, will mean that you will blow up your trading account, lose all your money, and your account will be closed after margin call of your broker. You see this, that the drawdown is quite steep in specific areas. This is just another indicator that the system is definitely not a very viable system and sustainable as well. As you can see here, you have a balance level of around 11k, let's say, but you see actually the drawdown or like floating losses is a couple of €1,000, and the actual net worth here at one point was only 7.8 thousand US dollars. It made the money back indeed. It's looking nice so far. What just leads me to the red flag number 2, what I got aware of from a fellow YouTuber. His name is René Balke. He already made a similar video a couple of weeks ago about the Bonnitta EA as well. Also checking out the real account in depth, but the hyperlink actually changed. It was a different number provided, so this is the current link you can check out yourself. But in the video of René Balke, we saw a slightly different in-depth analysis. So when you actually punch in the hyperlink of the video of René Balke, you see that you get actually a different kind of a trading account. Still, the stats are pretty similar. You get a stellar performance of even 862%. Again, the maximum drawdown is insanely high. The historical performance is again over roughly 2 years, what is relatively long. And then when you scroll down again to the equity and balance curve, you see pretty similar characteristics, that the balance curve is always up pointing, barely losses are being taken, and very steep losses here and there. Until mid of 2022, this year, somewhat the equity curve is not running on the same pace, so to say, as the balance curve. What simply means that the market, whatever market this trading account is being traded upon, is not going into the right direction for the system itself. It keeps on adding positions, which keeps on losing, as you can see here. And you can actually see that the drawdown is somewhere around almost 100%. Since the trading account started with 3.5 K US dollar and even dipped down below this starting level, what is another big red flag, since the creator of this system actually tried to somewhat hide the very bad performance of his system, since it is based on martingale, and martingale systems have to blow up at a specific point in time. Then again, if you go back to the original sales side of this algorithmic trading system, and you scroll down, we actually are talking about the third red flag of this algorithmic trading system, which is the mentioning of absurd high numbers, 3.8 million, made of 1,000 euros only. Or when you go down to the screenshots, ignoring the quality, simply taking a look on what kind of numbers are being stated here, you see again just high numbers. I can barely see, is it 3.8 million, 380 million, I don't know. I just see, the creator, the developer is simply indicating that you can make a lot of profits. 1,000 euros again to 3.8 million in 17 months. Again, you see high numbers, you see performance of 1400% here, 1,000 euros to 15,000 euros, and so on and so on. So this is the third red flag, that the creator is very salesy and just showing you numbers without giving you the context, what those absolute numbers mean, what kind of risk were being taken. And the creator is not really giving you a fair overview about this trading system. Then the fourth and last red flag, at least for this video about this Expert Advisor algorithmic trading system, is the lack of community, the lack of commitment. You don't really see names or faces. There's no obvious point of contact. The creator even mentioned that he was banned for spam, so adverse media. That is already another very red flag for this kind of system. So much about the 4 red flags, at least about this system. You see those patterns quite often in other systems as well. And now we can actually take a look on what it means trading this system, or at least backtesting this system on high quality backtest data. So we put it on US dollar, Japanese yen, and you can instantly see that an insane amount of trades are being taken. And let's just pause it at a random point of time when we have taken some trades. Let's see. And here we are. We have just entered again a ton of trades, all with the same lot size, no stop loss. So if you go even in the nitty-gritties of this kind of system, many more red flags are triggered actually. So always the same volume size simply means that the trading system is very likely not really pursuing a trading edge or something which is beneficial or is superior to other trading strategies. It is simply entering the market with a seemingly random lot size, since it's always the same, plus there is no stop loss. Having no stop loss in forex trading means unlimited risk, since you have to trade with leverage in the forex market, and if you do so without a stop loss, you do not only risk all the money in your trading account in one single trade, but you already see there is like a bunch open. You also risk money beyond your trading account in some extraordinary market circumstances, which can definitely occur, especially in those times we are living in right now. So this is already, another big red flag. Let's maybe run it a little bit more, and you can see that the trades are being closed right after they are profitable as a group, more or less, when I can see it correctly. You see when they are like in the negative, they are being kept open until a sufficient amount or whatever of those trades are in the green, or at least somewhat profitable. So it gives me, I have no idea, just this maybe as a forward, what the strategy is. For me it's quite a black box, but when I'm looking in how these trades are being opened and closed, it seems like that the system is not really trading a viable trading strategy, but seemingly just trading the equity curve itself, what is in the long run also, again, not really a viable trading strategy. That's it. These were a quick introduction about potential red flags in analyzing those algorithmic trading systems. And looking forward to your feedback, to your comments, and see you in the next video. Cheers.